Are you keeping an eye on the stock market but feeling unsure about where to start? Or maybe you've been wondering if that big AI company everyone's talking about is worth investing in. Just last week, we saw shares of a top AI player jump 20% overnight after announcing a partnership with a major tech firm, proving once again how quickly the market reacts to news. If you've ever felt like the market is moving too fast to keep up, you're not alone. But don't worry, we've got you covered. Today, we're diving deep into a fascinating story about a company making waves in the AI-driven automotive industry, and we'll uncover whether it's truly a hidden gem or just riding the hype train. So grab your coffee, sit back, and let's break it all down together. The stock market can be unpredictable. One moment, a company's value is plummeting, and the next, it's skyrocketing after a single press release. That's exactly what's happened with a certain company recently. Their stock has surged an astonishing 150%, all because they mentioned a collaboration with Nvidia. Intrigued yet? Let's dig into the details. This company, which we'll refer to as Cerence ticker CRNC, operates in a niche quite similar to what SoundHound AI focuses on. However, Cerence is carving out its space specifically in the automotive industry. But before we get carried away by the buzzwords and press releases, here's a question for you. If you had to bet on one industry that AI will revolutionize next, what would it be? Comment your thoughts below. Ready? Let's get started. Zooming out for a moment, Cerence's stock performance over the last 3 years has been quite the roller coaster. While it's down 74% overall, the last few months have seen a dramatic turnaround. Back in November, the stock had plummeted 96%, but now it's up an eye-popping 600% over the last quarter. Impressive, right? But what's driving this rebound? And is it sustainable? From a valuation perspective, the company's forward PE ratio is through the roof, 265.0. While that might seem alarming, there's a reason for the spike. Fiscal 2025 is expected to bring a revenue and earnings hit due to a significant business shift. However, projections for 2026 and 2027 show rapid EPS growth as the company recalibrates. This optimism might also have something to do with the recent change in leadership, with Brian Krzanich, former CEO of Intel, now at the helm. Could his experience steer the company in a more profitable direction? Time will tell. To understand why Cerence is gaining traction, it's essential to look at the broader context of AI in the automotive sector. AI technology is transforming how vehicles are manufactured, sold, and driven. From predictive maintenance systems to fully autonomous cars, the potential applications are vast. Companies like Tesla have popularized the idea of AI-driven innovation in vehicles, but the ecosystem includes many smaller players like who are providing specialized solutions. These companies focus on areas such as voice recognition, vehicle connectivity, and driver assistance systems, areas that automakers increasingly view as essential rather than optional. Analysts' opinions on Cerence are mixed. Of the 7 analysts covering the stock, 6 have issued a hold rating, and only 1 recommends buying. The average price target suggests a downside of 62% from today's price, a stark contrast to the recent rally. Why then has this stock become the talk of the market? It all started with a press release from Cerence announcing a collaboration with Nvidia to leverage their AI enterprise software platform. While this might sound like a game changer, there's more to the story. Cerence has been using Nvidia's technology for quite some time, so this isn't exactly groundbreaking news. Yet, in a market hungry for AI-related headlines, just mentioning Nvidia seems to send stock prices soaring. This phenomenon speaks volumes about current investor sentiment, but it also raises red flags about market speculation. Adding to the complexity, Cerence's recent financials paint a mixed picture. Last quarter, total revenue declined by 32%, with licensed revenue and connected services both taking significant hits. Professional services revenue dipped as well, and net losses ballooned. Over the trailing 12 months, however, total revenue has seen modest growth, and the company remains free cash flow positive, a rarity among smaller AI players. So, what sets Cerence apart in the competitive landscape? The company's AI solutions have been installed in over 500 million vehicles worldwide, including 46 million new cars in fiscal 2024 alone. That's a staggering market presence, but it's not without challenges. Giants like Amazon, Google, and Apple, along with emerging players in China, are eyeing the same space. Can Cerence maintain its edge? Let's pause for a moment. Why do you think AI headlines like Nvidia partnership spark such explosive stock market reactions? Share your take in the comments below. Cerence's competitive advantages lie in its scale, global reach, and specialized focus on the automotive sector. The company's software platform integrates seamlessly with various virtual assistants, enabling automakers to offer a consistent, branded interface. But the question remains: how long can this moat hold up against tech behemoths with far greater resources? Interestingly, Cerence's customer base includes nearly all major automakers, from BMW and Toyota to Ford and VW. In fiscal 2024, these partnerships accounted for 57% of the company's revenue, with a diverse geographical distribution: 42% from the Americas, 34% from Europe, and 24% from Asia. This diversity provides some insulation against regional market fluctuations, but it also underscores the importance of maintaining these critical relationships. When comparing Cerence to its closest competitor, SoundHound AI, several key differences emerge. SoundHound's broader industry focus allows it to tap into markets like hospitality and retail, giving it a larger total addressable market. However, Cerence's deep specialization in automotive gives it a distinct edge in this vertical. It's a classic debate of breadth versus depth. Both strategies have merits, but they appeal to different types of investors. Beyond automotive, the broader AI landscape is evolving rapidly. Industries such as healthcare, education, and logistics are increasingly adopting AI technologies. This diversification helps highlight why some companies like Nvidia enjoy such high valuations. They're not just tied to one sector, but are foundational players in the AI revolution. For investors, understanding where a company fits within this ecosystem is key to evaluating its long-term potential. But here's the kicker: Cerence's recent stock surge isn't rooted in fundamentals. The hype surrounding AI and the mere mention of Nvidia have created a perfect storm of speculation. While it's exciting to see such rapid gains, it's crucial to approach this with caution. Remember, what goes up quickly can come down just as fast. So, where does this leave potential investors? If you're considering Cerence, keep in mind the risks, from intense competition to reliance on a single industry. While the company's financials and market position are promising, the current valuation may not be sustainable. On the flip side, for those willing to weather the volatility, Cerence could be an intriguing play in the evolving AI landscape. Looking at the table, it's clear that Cerence, despite its challenges, is holding its ground in the competitive AI-driven automotive landscape. With a market cap of $651 million and a revenue of $331.5 million, the company showcases significant scale compared to smaller players in the sector. However, the gross margin of 73.2% highlights its operational efficiency, even as the EPS of negative $14.12 signals challenges in profitability. This stark contrast between strong revenue and negative earnings serves as a reminder of the volatility often associated with innovative tech companies. It also emphasizes the importance of assessing both the risks and growth potential before jumping into such stocks. What do you think? Does Cerence's strong gross margin make it a sleeper hit in the market, or do the profitability concerns outweigh the positives? Let's keep the discussion going in the comments below. Before we wrap up, here's something to ponder. Do you think AI hype is driving innovation, or are we just seeing a bubble waiting to burst? Let us know in the comments. As always, do your own research, stay informed, and invest responsibly. If you found this breakdown helpful, make sure to like this video and subscribe to Simple Investing Secrets for more insights like these. Remember, this video is for informational purposes only and is not financial advice. Thanks for watching, and we'll see you in the next one.